Hello friends, welcome you all to Green Wallet channel. This is in collaboration with Citizen Justice Forum. Our mission is to make citizens of India financially, legally and socially strong and empower them. So this is one of the mission. Many people they lose their money because they don't invest or trade in the stock market without any proper understanding of the market. They don't learn the tricks and they burn their fingers. So our mission is that you should know what you are doing. You should take the decision and you should not follow the herd mentality. Now, before we move any further, we have an ritual that you have to read this disclaimer and pause the video for a time, completely read this disclaimer because my view is on based on the candlestick pattern, the chart, what it gives a signal whether the market is going to turn from here, it will rally or market is going to fall. But it is always advisable to take an advice from a SEBI registered financial advisor. I will only give you a view that us based on the world charts, US 500 or Dow Jones, Nifty, and some other stocks. These are the chart which will give you an indication that the market or that particular script is going to turn from top to down or from down to top. So you have to participate in that move. If the signal is given that yes, you have to exit the market, you exit the market. If the signal gives that you buy, then you buy with a stop loss so that your loss is minimum and profit is huge. So that it is called 3 is to 1 theory. I am ready to take a risk if there is a profit of 3 rupees, then I'm ready to risk 1 rupee, right? So if that is what we have, then we don't lose the money. We protect our capital and we keep on making money. So now let's go to the US markets. And first, this is the Indian market, but I will go to the US market. Okay, so this is the US market. So now let's go to the US market and see the chart here, right? Now, what does the chart says? This is a line chart, but I'm comfortable with the candlestick patterns because in the line chart, they only give me the closing of that day. They don't show me the volatility that at what level it has opened, what level it has gone down, and what level it closed up. Now, if you see here, this is a green candle which is in making today. I don't know what's going to end. It can again make a red candle. There will be a big wick and a red candle. But since last 2 days, if you see, there was a red candle, two red candles bearish, and for one, two, three, four, and five means the whole week the market is in the same range. One day it is going up, next day it is going down, or 2 days it went little up and 2 days it went down, and now again it is coming to that same level. So market is in a sideways. There is no trend established, right? So if we want to know what is the trend, what we do is we click here, we go to the moving average. So here we come to the moving average, or we go here and say the average. Okay, let's go to this moving average cross. MA. MA cross moving average. Here it is, right. Now, what I will do is I will go to the settings so that the line is little broad, and you can see I use normally 21-day moving average, right? Everyone has their own. People use 8, 9, 13, 15. It all depends. So now I will make this moving average little thick so that you can see it. Now, what is the direction of the moving average, right? The direction of the moving average is, suppose if I make it this into a line, what does it says? That moving average is showing that it is going towards downwards. There is a V here made. Even this was a V made here and the prices went up, but now it is for the last 5 days or this last 1 week, it is moving around in the same direction. So I will not go long until and unless I see the moving average going up, right? So right now, if I look at the moving average, it is giving me an indication that the market is in a downtrend, right? It can be anything. Now, coming back to our Indian markets, let's change to Indian market. So this is our Indian market. Now, this is the Nifty chart. I'll make it a full open Nifty chart. All can see it. See, this is my entry and level where the market will go down. Till then, I have to have patience, right? Today also, if you see the market, in our market also for the last 3, 2 and 5 days, the market is in the same range. It is a range bound market. Today also this candle is an indecisive candle. It is a red candle within the body of a green candle in an equilibrium. It is not at the top. Top is somewhere here and bottom is somewhere here. But this also gives me an indication that all is not good with the chart. There is a probability of market falling down, right? Now, this is the Nifty chart, which even if I see from the Trade Tiger, right, I like this because there are wonderful tools here. Even this red is giving me an indication that market is negative bias. There is a negative bias. So now what we'll do is we had placed some few orders, right? So let's check what happened to that order. So I go to these reports and I click here orders and I click all. So for learning purpose, we had placed this order buy one Hindustan Lever, buy one Excite, buy one. So it all expired. It did not get executed because the price did not come into my order which I had placed. So it happens because I don't want to trade, go into the market and just trade because I want to trade. No, I have my own strategy. If it comes to my level, I trade. If it doesn't, I don't chase the market. I don't chase the script. I leave it as it is and let it go. Now we'll see what has gone up today and what has gone down today. Down is Device Lab. It is 3,655. It is 2% down. So let me open this Device Lab and check what is happening in this script. See, it had a very big downtrend from this level. Now it is going on a sideways, but it is going up. So in this case, in this scenario, if you find that after a great fall, and if market is going up, so what we have is we take the help of this Fibonacci line, right? It started falling down from here. This was the low, and from here it started going up. So what is it giving me? That if it comes down from here, it will come down to 2326. And another way of looking is I delete this, I go again to the Fibonacci level. It started from this point, it went up, then it came over here, and now it is going up. So immediate target is 5554, but there is a lot of noise, lot of buying and selling happening. So, and even the moving average is telling me that there is a room for it to go down. So if I want to buy, what I will do is I will wait for the market to come to this level, right? 3,600, 3,600 round figure. So I will put my entry point over here. I can do the entry setting over here when it is. So I'll buy here at 3,600. My stop loss will be just below that, and I can have my target, the near target. But if I want this to be on a long term, I can have a target up to here. That is for a long term, and it may take 2 to 3 years. So if I'm buying at 3,600 and it goes to 5,050 where I'll book my profit, right? So how much money I'm making? I'm making around 1,450 rupees per share. So it's a good risk reward ratio, but you'll have to have patience, and this will take at least 2 to 3 year times if you want to see how fast it can go up. This is a measure tool. See, from here to here, if I measure it, it took 15 months. 15 months, 1 week, and 6 days, almost 15 and a half months. And if I take the measure tool here, from here to reach this level, it has taken 9 months, right? So my estimate is this will take 1.5 years. So if you have that much money and patience, you can park your money in this share and you can make money. But why I am making this, buying this one share? Because once that order is filled in the evening, I can know I can go to the world market. World market starts around 8 p.m. Indian 8 p.m. time. Then I can know about our Indian market, and then I can take an informed decision. I can increase my shares from 50 to 100, from 5 to 10, depending upon my capital and my risk taking ratio, which normally in one trade, if I have a lakh of rupees, my risk is 1000 rupees. Accordingly, my what you call the shares quantity of the shares is decided based on my risk taking capacity. So this is very important. You should know, and I'm going to conduct a class on how to take evaluate your risk taking capacity, whether for the intraday or whether for the. So with this, we come to the end of this video. If you like it, you can share with your friends and contacts and keep your capital protected and start growing your wealth. So, but you have to be very careful. It should not take this stock trading should not consume more than 30 minutes of your per day, maximum 30 minutes. Once you become an expert, it is only 15 to 20 minutes. You put the trade, and once it's executed in the evening, you can revisit your this thing. So I hope you all like. And before we go, now I'm going to start with the Citizen Justice Forum channel also. So see you there again in that video.